Good morning, traders. Paul here with GammaEdge. Today is Tuesday, the 14th of June. Let's get started. So the fine print asks that everybody reads this. When you agree to it, go ahead and hit play on your reader. The market model, as you would expect, is bearish. A couple things happened yesterday that are notable. First of all, up here, this blue cyan line is our filtered cumulative tick. And this is a very unusual linear down pattern. This means, for all purposes, that orders were being presented to the exchanges faster than they could be cleared. These are sweeps typically, and this means people want out, and they want out in volume. So when we see this linearity like this is a clear signal, and it pays for everyone to pay attention to this. These historical moving averages, what we call the ribbon, is literally where we've been in terms of the cumulative tick. And we lost any upward advancement last week, and you can see we're moving back down, and this has caused the slopes to move down. When that occurs, when we get that failure and the slopes start to come down, even on the longest moving averages, which are up here in the cyan colored line, that is a clear indication we should be playing the downside of the market and not trying to swim upstream. We had some continuation patterns across the open, and when we see that, that too is bearish when they're down, pointed down. And I think that the key here is that the cumulative tick is remaining below the shortest term moving averages. And we use this as kind of an entry and an exit signal for our shortest term trades. And basically the fact that we're pulling these down, we get into what we call a railroad track down, and clearly this is a bearish indication also. So if you're trying to go long in this market, my regrets. If you are short in this market, you're probably doing all right. Last thing here, below the ribbon, if we do turn up, if you see the cumulative tick move up, cross the short-term moving averages but remain below this, my counsel for those of you is to short those bounces, paper trading of course. Index condition on a day over day, we actually did see a drop in the short-term puts, net negative gamma condition, but we also saw a corresponding drop here in the positive side of the equation. And when we see that across the board, we've got a little bit of rotation, a little bit of profit taking going on, but the fact that we're not getting any calls being built into the SPX over here in the SPY, and this should be red over here. My apologies for that mistake. I didn't catch that in my editing. Both of these are telling us that risk off and puts are occurring here. Note minor change compared to the previous day, a drop here in puts. So some profit taking, some addition back in, and that is something to pay attention to. Taking a look at the Qs and IWM, pretty clear picture. We had a build out of puts in technology with a drop in calls. Same thing in IWM. This should be small caps, seeing a push upward in the put structure, short-term gamma structure, and a drop almost flat in calls. No demand for upside, no expectation upside in the small caps. Volatility, fairly significant drop here in the puts. They are monetized. Today is the monthly expiration. That's important. A fairly significant growth in the net positive gamma. We don't think that the volatility model, the VIX, actually corresponds to gamma per se. It doesn't trade like that for a number of reasons, but we like to watch it in context of our other tools because it helps us dial in what's happening. And clearly you can see that the positive side is calls are going in, which is indicative of a volatile market and people wanting to participate in an upside movement. Taking a look here at the expiry for the VIX, we've moved up a considerable amount, and note the considerable growth at the 35 strike. We feel that's very, very important. So as price moves up towards that 35, we do expect a monetization, and perhaps, just perhaps, that can change the equation a little bit. Early morning note, we are still very, very elevated here, and we think that's important. And you can see that the positive GEX is sitting here at 35. Now, what that is positive gamma. As we move above 35, all of the VIX structures that are out there, the short-term gamma, will be in the money, and we could see a lot of profit taking on that also. So just be aware, 35 seems to be the upside target. Downside target is debatable, but I would say it's right around the 29-30 range. Taking a look at the near-term expiries, very, very thin on the SPX, as you can see. The SPY 382, we're below that. This is for tomorrow's expiry because today's Tuesday. This is cash settled for today. This is the 0 DTE. This is a 1 DTE, 1 DTE, and 1 DTE here on the SPY, Qs, and IWM. You can see what these key levels are, so where we are tomorrow will have an impact, but certainly today, take a look at these. A lot of in the money dominance here, net negative expiries. You can tell that by the cumulative measure here. And we feel that there is really no upside demand right now. So watch for some monetization and what we're doing there. Just continuing on this presentation, this is my JPM model. I have several models, but this is the one that I think is consuming all of the air in the room right now. This is the Gamma model, and basically it is targeted for the end of the month, although this is all of the JPM strikes because those models are illiquid, and we feel that the 44,100 contracts that are going to get rolled at the end of this month are going to grow, and we feel that they really are dominant right now. So we're right here at Circle 3. Some other sites have pointed out why we're not going to go below 3,600, and part of the reasoning here that's really obfuscating really what's happening here. You can see visually what's happening as we go from the gray line, which is right now, towards the end of the month, which is through the green and to the red. You can see that gamma grows, and gamma is growing a dramatic amount as we get closer and closer to the end of month, end of quarter expiry, and you can see where 3,600 is there. I do want to call out a couple things, though, that you should understand. The blue line is literally the end of month. Where are we going to collapse to in terms of overall gamma at the end of the month? And you can see across the board, if this is driving a lot of the structure in the market, that we're very, very close to a zero gamma, somewhere around that 36, call it 50, 36, or excuse me, 35.50, 35.75 range, and all the way up here at maybe 40.50. And so this becomes a pinning area, and you can also note that as we get into this area, the change in gamma gets very, very flat near the end of the month. So when the change in gamma is flat, that's called speed, and when speed is zero, we have seen in the past where dealers tend to focus on that area because the adjustments are constant. So the adjustments to delta in hedging are relatively constant. Unlike here, as we move down in price, the adjustments are nonlinear. And what that means is it becomes harder and harder to adjust based on what's going on. So while we do concur with some of the other folks out there who are saying that we're just not going to see 3,600, we do think that actually we could push towards that area. We do agree that 35.50 or so probably is the lower bound, and 3,600 by the end of the month probably is the lower bound. But note where we are within that overall structure, and this is most likely the rationale why other folks are obfuscating that and talking about that. The ES structure, just want to point out we're down here below negative trends. It's remaining fairly stationary. This is the ESU, this is September contract. You can see 3,600 is the target to the downside. Just be aware of that. A lot of folks are targeting this. The structure right now through the end of the month now does not support that, but the end of the summer, end of quarter for the new quarter, for September quarter, This is where folks are lining up. We're about 35-40% into the roll right now. Volume in ESU is growing dramatically as people roll out of the ESM, which is the June contract, which will be complete by this Thursday. The 0 DTE, there's virtually no liquidity down below where we are right now, so we're not expecting a lot of activity due to the 0 DTE. I will note that the nearly 8,000 negative in net GEX is a fairly significant level for a Tuesday expiry, but nevertheless it's not overly large. You can see some of the key levels that are rolling off today. This could open the door for moving north. We'll just have to wait and see. So 37.75 and 38.25 are key levels we're watching for the expiry today. The combo, which is the AM and the PM settled. First thing, extremely negative. We've been seeing this more and more. I know it sounds like a broken record, but this is an extremely negative value. I think we've only seen this twice or perhaps 3 times this year. So extreme bearishness, no question. You can see just a sea of red here. I've highlighted the different delta notionals that you can see here, extremely large values. They are bigger to the north than they are to the south. And again, liquidity is starting to dry up to the south. You can see that down here compared to what we have up here. And we think that's important. Over here at Circle 3, pay attention, 37% is rolling off, another 2%, and then there's some slices in here that aren't labeled. So over 40% of the SPX is vaporizing between now and Friday. Extremely large amount. This is approximately 3.5 trillion, maybe 3 trillion, excuse me, 2.5 trillion dollars that has to get redistributed. Very, very significant there. Expiration, as you would imagine, Thursday, Friday is stacked up very, very large. The end of the month quarterly roll is stacking up, and July is already a very significant number. Very interesting to see what's going to happen here. Tomorrow actually is bigger than today, so expect some fireworks again today and tomorrow, and we'll just have to see where things go. The SPX structure, we do think 3,700 is the line in the sand. If we do lose 3,700, the liquidity below this is pretty poor. We got a lot of overhead in front of us. We need to see a change. You can see the call structure in part because we've fallen so much, but just the call structure and relative dominance has just collapsed. There is no upside demand right now. We do expect people will start buying up here, but not yet. We're not really seeing any calls going. So what's the summary for today? The market model is bearish. We believe to sell the bounces in your paper accounts, of course. Liquidity below 3,700 is a problem. Today is the line in sand, or is last trading date, excuse me, for the monthly VIX, which expires tomorrow. Thursday, Friday expiry is 40%, and so we think everybody needs to buckle up. We are expecting an end of month, end of quarter range to pin in that 3,550 to 3,600 on the low side and 4,050 on the high side. That could change if the structure changes, but for right now, if you can sell premium outside those wings, you're probably safe. So with that, I bid you farewell. If you like today's content, please join us at GammaEdge.us. That'll take you to a sign-up page. That sign-up page will get you into our Discord. In the Discord, we have a 14-day free trial, all the tools turned on, great group of traders, a lot of discussion going on about what we're seeing and how to apply this stuff to your style of trading. Follow us on Twitter at GammaEdges with an S. And then here on YouTube, smash that like button if you like today's content. And then, of course, follow us on YouTube so you can get notified next time we post something. So thanks, everyone. Make it a great Tuesday.